Good morning and welcome to this week's edition of Winston's Weekly, covering all things property. I'm Manny Anton, your host for today's property chat. Winston, welcome back.
Thank you.
All right, as usual, let's start with what's happening in US markets. So we've seen, in fact, they've had a pretty decent run, the old US markets. The rally continued this week. We saw the S&P and the Nasdaq hitting new record highs. There's been some additional commentary from the Fed, continuing to give investors further confidence that the rate cut is definitely coming this year. We've got US Treasuries now trading around that 4.25% level. What are your thoughts on the latest US news?
Well, markets are still sort of looking at things quite positively in terms of expectations of rate cuts this year, and so they've been running on that as well. Some of the quarterlies came out and they're okay, so the US market is quite strong. The economy is going very well, which also is a positive as far as markets are concerned. But we'll just have to wait until the Fed sees enough data, consistent data that points to the fact that they can't cut rates without having a negative impact on inflation.
Okay, and having said that, with that in mind, let's turn our attention to domestic markets. The RBA policy decision was released on Tuesday. As expected, rates were left unchanged, but I thought it was pretty clear from the commentary that the RBA board is not convinced it's seeing sufficient evidence yet that price pressures are starting to ease sustainably.
Correct.
So they need a little bit more proof, right? Did you have a view on that?
As evidence of that, they actually stated that they did talk about raising rates rather than cutting rates at this stage. Whether it's just a point that they want to make to the market that that they haven't quite made up their mind yet, and to be cautious about things. But we need to see, and they need to see, data that is consistently showing an improvement in the numbers that they're looking at, and that might be a little while down the track. So I think it's still wait and see. Our market hasn't really broken out in the same way that the US market has, but expectations here is that whilst we will have rate cuts, it's more likely to be at the very end of this year, if not the beginning of next year. So it keeps getting pushed out. Yeah,
it does. Although I noticed on the European front, they seemed a little bit more ahead of the curve there when it comes to rate cuts. Because in fact, overnight, whilst the UK had their meeting, they didn't cut rates. They left them unchanged. They left the door open for potential rate cuts later this year. And the Swiss bank surprised everyone by actually cutting again overnight, 25 basis points. Yeah. So that's the second cut they've done in as many months. So, the speed of the European economy versus the US is definitely...
It's chalk and cheese.
Yeah.
Chalk and cheese. And so they have room to cut rates, but more so they're cutting rates on hope and expectations that inflation will come down rather than seeing the actual numbers at this stage. Whereas in the US and in Australia, the central banks want to see the numbers first. So
they want to see the proof.
Yeah, they want to see the proof.
All right, let's go to domestic property news. Now we saw some reports that Mirvac is set to sell a 34-storey office tower in Melbourne CBD and another 11-storey building in North Sydney for what looks like a pretty steep discount to their peak value. So discount they're quoting was somewhere, it had a 2 in front of it. It was like 20,
it was 20%
type stuff.
20-odd%.
Yeah. What are the implications there for the office sector? And
well, I think that sort of highlights where valuations and where markets really are at the moment. The buyers are looking to pick up properties at what they perceive to be value prices, and the sellers, to some extent, have been hanging out for better opportunities to sell, but that hasn't happened. So the 20% is about in line with where generally the market is pricing the REITs.
All right, and also in the news, Dexus was out yesterday announcing a 9% fall in portfolio valuation since December 2023. So, what's the read through there?
Well, the read through there is that effectively you've got to think about that number in terms of some of the other REITs that haven't come out with valuations yet. That number implies, or actually it was worked on the basis of, the office valuations are down 11%, and the industrial portfolio is down 1.2%. Now, realistically, again, that brings property values in line with what the market is expecting. Is this the end of it? I'd say it's pretty close to the end of it. I mean, their peak to trough values are down about 20%. This is the third or fourth time that Dexus has actually lowered the value of their portfolio. They do have some quality assets. They're exposed primarily to the Sydney and Melbourne markets, with less of an exposure in Queensland or Brisbane and in Perth. So they've got properties that are well located. But vacancy levels in general in Sydney are running at about 13% at the moment, which is not something that's against a long-term average of about 8%. So vacancies levels are still fairly high. And incentives are also going the wrong way. So incentives remain at high levels, which is not helping their bottom line.
No, and over the last 12 months, there's been a fairly clear gap between what the buyers have been looking for, what the sellers were willing to trade at the levels. Do you think these couple of transactions that we've seen now might trigger a little bit of a round of actual transactions?
I'm pretty sure that's the case. The other thing to keep in mind is that a lot of the transactions were being held back on the expectations that we would have had rate cuts now, which would help to support the view that we were at the bottom, and that hasn't eventuated. So for those REITs that need to get access to cash, they're basically forced to sell, and that's the issue. The dilemma is this the right time to be selling? They could have sold earlier, but they're going to do it now because they need the cash.
Yeah. Okay. All right. Well, that makes sense. And just before we finish up, Lend Lease. We spoke about it last week. You raised it as a stock that had done pretty well when first announcing their strategy of pulling out of those international markets and refocusing their business domestically. But the stock since has turned around and actually now trading, substantially lower. I noticed this week as well the stock continues to, drift lower.
Yeah.
What are your latest thoughts on this one?
It's now sitting around $5.40. After the announcement, the stock kicked up from around the $6 level to about $6.50. So it's sort of lost $1 or so since that announcement was made. And as I mentioned last week, I think markets are realising that it's one thing to say we want to sell these assets, but in this sort of environment, you've got to find the buyer, and you've got to find the buyer that wants to pay what they perceive to be the right price. And so that's not to say the strategy is wrong, but I think now the reality is it's going to take much longer for it to play out.
Yep. Okay, understood. And then looking forward to next week, is there anything in particular coming up on the property front that we need to be aware of?
Well, next week is the last week before the end of the financial year. We'll see some more announcements of distributions. The distributions for the REITs that have announced so far in this last week have not been cut, so they're basically continuing on with the rate of distribution, which is good. I don't expect any changes next week either. But the telling point will be when they go X, which is on the 26th or 27th of the month, whether investors will want to stay in those stocks and continue to perhaps reduce their exposure to property.
Yep. All right, understood. Winston, as always, thank you for your time and your insights today.
It's a pleasure.
And we will be back with another edition of Winston's Weekly, this time in 2 weeks' time. Until then, have a great day and a great weekend. Talk soon.